Well, welcome to the Mutual Fund Show. I'm Neeraj Shah. The next 20 or 25 minutes, we'll talk about a few key aspects around AMCs on mutual funds. Last week, the announcement about Jio BlackRock getting into a JV to launch the mutual fund business in India created quite a bit of news and stir around it. So we'll try and talk about whether for people who are into passive investing, what kind of options could this bring to the table, if at all. Then a clutch of NFOs are open, and we'll talk to our guests about whether any of these are suitable for an X kind of investor or no. Our guest today, to start off the show, Suresh Sadagopan, MD and Principal Officer at Ladder 7 Wealth Planners Private Limited, and Harshad Chetanwala, co-founder of mywealthgrowth.com. Both of them join us right now on the show. A bit later, we'll get an Ankit Jain, who is the fund manager for Mirae Asset Multicap Fund, as the NFO is on right now, to talk about what is it that they have to say when it comes to their fund offering. Chairman, thanks so much for taking the time out. Hope all is well. Suresh, can I start with you? Did this announcement about an NFO like this, or rather a JV like this, Jio and BlackRock, with tremendous expertise and hopefully good distribution as well, excite you?
Yeah, I mean, I would be slightly cautious about saying anything about this. See, the point is there are about 43 other players in the market as it is. And I would not call any of them as a pushover. I mean, if you really look at the pedigree of most of these players, I mean, they have deep domain knowledge. They are from the financial services industry. And some of them have, again, global partnerships. And they have done wonderfully well for more than 2 decades. So if it is anything but a pushover for Jio BlackRock, I do understand Jio, I mean, BlackRock has the expertise. I mean, they have had one more innings in the country in the past, along with DSP. So they know the terrain to at least probably some extent. And Jio, of course, I mean, they are a juggernaut today. And they had that intention of coming into financial services. I think this is a very good, propitious partnership that way. It is expected to do a lot of things. I mean, Jio is known for disruption. They have done that in telecom space. They have to some extent done that in retail space. And they are known as a disruptor. And it is possible that they may do something here. Only that, I mean, there are very, very seasoned players here. And what, I mean, I would say that their success is not a foregone conclusion. What they are actually going to do on the ground, what kind of products they are going to bring to the table, and whether it is ultimately exciting to all of us is, and for our clients, is what will actually decide whether they are really successful and how quick the uptake is. In their case, it's a digital offering, I believe, digital first kind of an offering, which I think, I mean, they are absolutely on the button as far as that is concerned, because I mean, that is the way entire globe is going on various fronts. Whether it is payments or whether it is retail or anywhere else, I think digital is the way to go. So they have a lot of things going for them. But I would be cautious to say that, yeah, I mean, it is not a foregone conclusion that success. It's certainly very exciting times for the mutual fund industry. These people are expected to expand the mutual fund cake, and probably we will get to the 100 lakh crore mark faster with Jio being there.
Yeah. Well, Harshad, let me get you into this conversation. Independent of whether Jio BlackRock is successful or no, when I saw their press release and an opinion piece that I wrote the subsequent day, it is evident that they are going to they are digital first. They are probably going to look at a lot of passive options. And when one looks at, for example, the statistics that Spiva lays out, especially in the large cap category, we know that beating the index has become a Herculean task for funds. And now I mean, at least the large cap category, and it's been now been proven for the last few years and not just 1 year. So Harshad, my question is, if Jio BlackRock is unequivocally saying that they are going to come out with a lot of passive digital options, does it actually open up the sphere of low cost investing even more in most categories, especially the large cap, and could that be beneficial to investors?
Sure. So I think Neeraj, let me start off with the universe first, and then I'll come to the question that you have put forward. I think that's very important when we say that a big player like Jio and BlackRock, when they come in, okay, there's a lot of buzz around. We have to understand that today, despite of all the efforts that the industry has done, we have close to around 3.75 crore unique investors in India, which also includes NRI. Okay, so the market space is huge. There's always the potential for a new player to come in and then put forward their products and reach out to a bigger audience. Yeah. So it would be not in, and I believe it should not stop to just Jio and BlackRock. There has to be many more good players that need to come in. There are already very good players who are doing very well for the industry, and that's we are seeing in the numbers the way the investors acquisition is happening and the way people are investing through mutual funds. Coming back to the question of yours, which is related to passive, we all have seen what passive funds have been doing in last couple of years, particularly post-COVID. In fact, it started off way back in I think 2019 odd, where the focus came on passive funds are performing better than the active funds. Okay, there have been multiple reasons for this, Neeraj. Today, if in case we look at that data again, because the markets have surged in last one quarter or more than that, we look at that data. And I would not like to split it between and I would not like to restrict this conversation only up to the large cap, and I'll bring in large and mid cap and flexi cap category. If you look at that, and there are close to around 140 or 150 funds, right, which are actively managed, and out of which, if I put them on a horizon of a 3-year or a 5-year, there are more than almost 50% of these active funds have performed better than the passive funds, or if in case I make an index fund, a Nifty 50 index fund as the benchmark. So there is always a space for a good active fund to do better if in case they are able to generate the returns and better than the benchmark, very frankly. But yeah, we have seen globally that passive funds have been one of the most preferred option by the investors. Okay, and that trend has picked up in India. But we still believe that it is better to create a blend of active and passive. Right. Coming back to Jio, of course, they have a lot of reach in terms of different kind of distribution channels that they can come up with, and another space which probably a new asset management company can focus on is probably reaching out beyond the top cities or towns. So that's where I think, barring the reach, I think the education is very important.
Sure.
All those things we have done, education is the key. And in the end, whosoever come with any disruptive ideas, this is an asset management business. Till the time the assets are managed in the right way and generate returns for the clients, that is where the investors are going to put their money in.
Got it. Okay. But here's the limited point is, at least when I wrote the piece, I mentioned about whether it's not necessarily meant to be a disruptor for the industry. That's part one, because the pie is growing and everybody can grow together. But two, I'm particularly interested in seeing the kind of passive options that, because of BlackRock's expertise in being able to do so, brings to the table as well. Could this be, would be too far to go that this is the vanguard moment for Indian AMC space? But let's wait and watch what happens there. Jain, thank you for your initial views on this subject. But now to something that is, that is something that is to look forward to. Now to talk about something that is here and present, and there are a clutch of NFOs open. Some recent, some currently, some coming up in the future as well. Now I'd like to talk about some. Now, at an event that we did last week in Baroda, Navneet Munot of HDFC was there, and he spoke about the HDFC charity fund for cancer cure. Now it's got a few dimensions, such kind of investment. Suresh, I'd like to start off with you on this one. Have you given a look at this? Is it a good investment option? And what kind of investors should or could look at a fund like this?
Actually, this is a wonderful initiative coming from HDFC. They have done this in the past in 2011, 14, and 17. And this is the 4th iteration, and they've already helped about 13,000 patients till date. So a lot of people, lot of investors that we are in touch with, they also want to do such kind of philanthropic activities. A lot of people have this intention to give to good charitable causes. A lot of times where they stumble is that they are not able to find a proper avenue to channelize that. And I think HDFC, through that charity fund, which they have come up with now in the 4th iteration, I think that is exactly what they are trying to do. And they are giving an avenue for a lot of people to participate and in helping our other countrymen in a useful manner. So previously they have raised about 226 crores, and it has, like I said, it has gone to about 13,000 people. So this is a wonderful initiative. In fact, I would go on to say that they are doing this for cancer care. There are lots of areas which, where people are suffering and where people do not have the money, especially people below a certain threshold. Probably they can look at those initiatives in healthcare. Also, they can look at education, elderly care, and things like that. I think this is the need of the hour. I'm seeing only HDFC currently doing that. If more and more AMCs come out with these kind of initiatives, it'll be good, and investors' money can be channeled back to the society at large. Now, coming to the question which you asked me, whether this is a good investment option, it is not really an investment option per se. I mean, if you consider maybe 2 or 2.5% return as sufficient return, only then it is a good investment option. See, what exactly they are proposing is that 50 to 75% of the so-called dividend which they are going to get, or IDCW option which they are going to get, is going to be channelized to that fund. The Indian Cancer Society, and they will be in turn distributing that money. So this is a social impact project, and people who are donating here, they will also get that ATG benefit. Suppose they are donating 50%, they'll get ATG benefit to the extent of that 50%. So it's a good initiative. It's a social cause, and people who are interested in participating in that social cause should look at this. So, I mean, kudos to HDFC. I would want to see more of these initiatives from other fund houses as well.
Harshad, can you come in? Because I thought, since one can donate 50 to 75% of the return, but there is also a tax element out here, Harshad. Any thoughts that you have which are different than what Suresh mentioned?
Sure. So I agree with Suresh. It's a very good initiative, no doubt. And I think the numbers are, like 13,000 patients being happened. And I think the average, if in case we take the average, they have probably helped around, the average amount is around 5 lakhs per patient, which is substantial, which is good for the people who come with that kind of a illness, because very much help that they need, right? But this is an FMP at the end of the day, Neeraj, right? And there is a segment of investors who will typically use these kind of investments when they look at. Of course, this is not an investment. I think I agree with Suresh. It's more about people who would like to donate back to the society in the form of investments. At the same time, probably the IRR or the returns for the investor at the end of the day would come to around 2%. The rest of the money they are passing on to the society, which is good, right? But there is a segment of investors who will typically invest into these funds, right? And when you originally look at FMPs have been used by HNIs or retired investors, right? So retail investors may not be that keen to participate. Of course, there are a lot of people who would like to give it back to the society, and they may participate in these funds. Yeah, but at the end of the day, it's a very good concept. It's a very good initiative, right? And through the investment, if we are able to help people who need it, it's a very good way to do it.
Okay, well, viewers, there you have it. The whole idea of including this in this conversation was that for a lot of people who are looking for avenues but don't have one, both our experts believe that this is a good way to do so. There's a trusted brand name out there, and I think the cause lists out the charity to which, the impact foundation to which the monies go to as well. Donations can happen. You get your ATG receipts, as Suresh mentioned as well. So do give this a serious look. Not from a person. It is an investment, because when you invest in this, you feel happy. So in some sense, it's an investment as well, but not an investment in terms of you getting returns of monetary returns, but being able to help others. So that's the key thing. Now, when you want to talk about getting monetary returns, there are other NFOs which are on. One such NFO is the Mirae Asset Multi-Cap Fund. The NFO is open for subscription from July 28th. So it opened a few days ago on till August 11th. And the fund manager of this NFO, Ankit Jain, joins in right now on the show to talk about what is the idea behind this NFO and what are the kind of returns that they believe they can deliver to the investors over the course of the next 1, 2, 3, 5 years. Ankit, good having you. Thanks for taking the time out.
Yeah, hi. Thank you, Neeraj. Thanks for your time. Yeah.
The pleasure is ours. So Ankit, tell us a bit about the NFO.
Yeah, so NFO is about Mirae Asset Multi-Cap Fund. So this is a category, multi-cap category, which is very unique category, which do have, I think, pretty good allocation across all the 3 buckets of the market: large, mid, and small. minimum 25% each in all the three buckets, and then 25% is the flexibility to allocate in any of these segments. So I think this is a very interesting category because, I mean, if you really look into historically, I mean, I think one part of the market do behave, maybe to outperform 1 year and then sometimes large, mid, small. This as a product which can combine all these three buckets in a right proportion, and I think do offer lot of value as such. And this will also be one of the product from our basket. In terms of diversified portfolio with relatively higher proportion of the small cap into this. So to that extent also, I think it becomes even much more interesting category. So I think this is a category which do provide a pretty good balance of, I think, large caps on the one hand during volatile times, and I think during buoyant time, I think mid and small cap good allocation also do provide, I think, desired sort of a alpha over time.
I heard you say that it will have a large proportion of small caps, and I heard you also say that small cap during buoyant times. Are we to believe that you guys as a house believe that the next 3 years are buoyant times, and therefore a higher allocation to small caps could yield better returns?
Yeah, so absolutely yes. I mean, if you look into the sort of a change in the economy has it happened. I mean, last 5 years, if you look into small cap earnings growth has been at around 14% odd CAGR, and that is irrespective of the fact that last 5 years might not be the best of the macros. I mean, even prior to COVID, GDP growth was less than 5%. Then COVID stuck, and then we saw geopolitical issues, inflation, interest rate. I think a lot of things has that happened. Despite of this, I think, small cap earnings growth has been decent. And going forward, if we are talking about, I think, macros being pretty rock solid at this point, and that being further, sort of supported by bottoms up micro improvement across many of the sector in terms of deleveraging of balance sheets, that offer, I think, that much more sort of a earnings visibility. And if that is being the case, definitely yes. I mean, I think near-term valuations are expensive versus historical average. But if someone is having a, I think, time horizon to play, I think 3-5 years sort of a time horizon, I think this as a product with good mix of mid and small cap can really, do well.
Got it. Ankit, please correct me if I'm wrong, but are you giving some bit of either back-tested data or some estimate to people, or forget the data, but here's the question for people who are either listening to you right now or will listen to you when they see the show later on, or will read the story about the show that we write on our site. I would love to know that if they're investing in a fund like this, what is the kind of return that they can, envisage over a 3-year period? Because I'm sure you tell people that don't invest for 1 year, invest for 3 years. So people are saying, okay, we're ready to invest for 3 years or longer than that, but at least give us some idea about what are the kind of returns that we can get so that we can take an informed decision. What would you say to that?
Yeah, so this is, first of all, relatively a newer category with newer benchmark, I think just a couple of years old. But if we take the same sort of a benchmark constraint and try to do back testing of data, then I think last 5-year rolling return has been into the mid-teen, sort of a number. So I think clearly, if you try to look into from the return expectation point of view, it has to be a function of earnings growth going forward, right? So typically, if we look into market over longer time horizon, ideally low teens sort of earnings expectations has to be there, because nominal GDP growth rate itself is around 10 odd percent. And within that, typically, I think the listed larger companies do tend to grow, faster than the overall, let's say, nominal GDP growth rate in terms of earnings growth. So keeping that thing in mind, and over longer time horizon, typically mid and small cap do tend to give, 2-3% additional sort of earning growth over large cap. For a reasonable sort of a time horizon, if you try to look into. So I think in a product with mid and small cap, weightages is going to be 50% plus for sure, 55% or so. I think aggregate earnings growth ideally has to be somewhere at around, let's say, mid-teen sort of a number. And even if, let's say, starting point of valuations being a bit expensive versus historical average, ideally low teen sort of an expectations, one should keep in mind from the longer term standpoint.
Got it. Ankit, my final question. People also love to identify with the traits of the fund manager managing the fund. Yeah. And some people love aggressive fund managers, depending on the category. Some people like conservative managers. Some people like balance. And there are all three kinds. So I'm trying to understand that when people are thinking of the fund manager who's managing this fund the multi-cap category, a 3-year horizon or a 5-year horizon, what is the kind of investing trait that the fund manager, which is you in this case, brings to the table for this fund?
Yeah, so it has to be, I think, very balanced sort of an approach. I mean, across style and then across the market cycle, right? So we do follow a set template of our sort of an investment philosophy, which is obviously first bucket being always to invest in growth-oriented companies. More so, India being a growth-oriented market, first priority always remains to invest there. And then that also has to be backed by, I think, to participate deep in value businesses, right? So it is sort of a barbell sort of an approach where I think a large proportion has to be into maybe 75% of the portfolio into high growth oriented companies up to a reasonable price. And then second is about participate deep in value businesses. So, so I think pretty good blend of these two style into the portfolio with enough diversification across different sectors. Typically, try to avoid taking very heavy active sector call, but I think active stock call can be significantly higher depending on to our sort of a conviction on that name and our sort of internal price value framework. So I think idea always remains that try to deliver, I think, consistent, consistency, across the cycle while not taking very heavy active sector call, but at the same time, try to deliver the desired sort of return through bottom of stock selection. So I think that clearly remains the, remains the investment philosophy. And I think we'll try to work with that.
Excuse me. Well, wish you all the best for that. Your house has done some really good work in the recent times. Wish you all the luck and more for this new fund as well, Ankit.
Thanks a lot, Neeraj. Yeah, thank you.
The pleasure is ours. Well, viewers, so that's the view from the Mirae Asset team. Their NFO, multi-cap NFO is on till August 11th. And you heard the man who will be managing the fund, but what is his view on what is it that they bring to the table, the kind of returns and the kind of risk tolerance, etc., that he brings to the table as well. Harshad, I'll start with you on this one. You would have studied the NFO as well. You heard the man who's managing the fund as well here. What is your advice? Because typically people say that when it's an NFO, wait for it to get proven and then go out and subscribe. But Mirae's now had last few years of fairly strong equity fund returns as well. How would you look at this NFO?
Sure. So there's no doubt that Mirae as an asset management company has done very well when it comes to the equity funds, and over the years we have seen the proven track record. Of course, if every fund goes through its phases, and every fund house can go through its phases. So we can easily discount the near-term underperformance when it comes to just peers. But I think overall, if in case we look at Mirae from a longer term perspective, most of the funds have done very well for the investors. So we also follow the same view when it comes to Mirae. Coming back to the category, I think multi-cap category is a much more younger category. It has gained a lot of popularity in last few years. If you see that in over a 1 year period, I think the highest number of jump in terms of the highest AUM jump has come into this category. If in case I leave out small cap and dividend yield funds. So the focus has shifted to multi-cap, and that's predominantly because a lot of investors are excited about the mid-cap and small cap space. And this fund offers that because you have to put around 25% in mid-cap and 25% in small cap. And predominantly you would have seen the kind of interest or the flows that are coming into these funds in past. Every fund house wants to be in that category, Neeraj, and so does Mirae. Okay. And it's a prominent category. Mirae has all their funds in the prominent categories. This was one of the missing link, right? So they're trying to get into it. Of course, one can look at their track record over the past when it comes to their equity fund management and then decide on what is the right thing to do with the new fund.
What's your advice, Harshad? Subscribe or not subscribe?
So you're asking me?
Yes. Okay,
so I've been someone who prefer existing fund with a proper track record when it comes to the category. Their track record as an equity fund is, an equity fund manager is great, no doubt.
No,
but at the end of the day, I'm putting my money into a fund, and I may like to wait for some more time till the time to decide that is this a multi-cap fund which I want to be into, or there are existing multi-cap funds with proven track record, and I may like to opt for that if in case I compare them. But I need some comparable data, so I will wait for some more time.
Okay, and I'll come to you for the names as well, but let me get Suresh into this. Suresh, what is your thought on this NFO?
So I think you started with the fact that typically many people do not recommend NFOs, and I mean I'm one of them. We generally do not recommend NFOs because typically any NFO that comes, typically there are many more in that category or a related category. In this particular case, a related category will be a flexi cap, though it is not exactly the same, but the components can be very similar. So the flexi cap category, I mean, there are quite a few. Multi cap, there may be comparatively less, but if you look at multi cap and flexi cap together, I think we have a credible list of good performers. I completely agree with Harshad that Mirae Asset has been a wonderful equity fund manager, and they have proved their mettle with many funds across the board, across time frames. So it's anything for coming from Mirae Asset. I mean, we really have to take notice. But having said that, I mean, I would be cautious about putting my clients' money into any NFO. It's not about this particular NFO.
Sure, okay.
Any NFO, because other credible options are already available. Though we keep saying that, I mean, past performance is no indicator of the future, but still the past performance, I mean, counts for something. And we know what is the fund manager style. We know what is the kind of return they have generated in the up phase, down phase. I mean, we know all that, right? So from that point of view, we would want to be slightly cautious. We would want to see some kind of a track record, performance record over a period of time. And after that only we would want to, I mean, recommend that. So,
okay.
So there is one more point. One more point is, I mean, we would be ideally, I mean, we are putting together the portfolios for our clients. So if we are putting together the portfolio, let us say a large cap portfolio, a mid cap component, a small cap component, I would like to choose 3 different funds instead of a multi-cap or a flexi-cap fund, because I have a lot more control in what kind of components are there in my client's portfolio, rather than a multi-cap category, which I don't really have too much control over. So that is also another reason why I would be slightly cautious about recommending multi-cap as a category.
Okay, so you are avoiding the category as well, per se. I was trying to ask you that instead of the Mirae NFO, are there other good names in the flexi or the multi-cap category that you would recommend? You are saying you don't like that category only per se, but if you had to, are there funds that you like there, Suresh?
I'm not sure whether I'm supposed to, I mean, give you those names. I'm not very sure, but I mean, there are flexi cap funds which we generally do recommend. In my opinion, multi-cap funds, it's a bit of a straight jacket which has come into a multi-cap fund, because the fund manager has to invest at least 25% or more. Flexi cap that way is giving more latitude, more flexibility to the fund manager. And I would prefer that. I mean, if I want to trust the fund manager, I would want to trust the fund manager 100% when it comes to that fund, in terms of going anywhere and putting that money. So I would prefer a flexi cap over a multi-cap category, if you ask me.
Okay, get your point. Okay, Harshad, come to you. I heard you mention that there are options out there. Would you be in a position to tell our viewers maybe an option that they can then do their own research and then put in the money if they feel the risk reward is right?
Sure. So I think Neeraj, the flexi cap, the multi cap is basically has become a sort of a subset of flexi cap, which was earlier the same category and which got split. So there's a lot of comfort when it comes to flexi cap, because as Suresh said, and he's right on that part, because the flexi cap funds have the option of controlling the allocation between the market capitalization, which is not there in multi cap. So the comfort is more in flexi cap, very frankly, and there have been very good flexi cap funds. Like if in case, of course, I can name a few, but not necessarily that it has to be.
Yeah, it's not an exhaustive list. Sure.
Yeah. So there is the flexi cap of Parak flexi cap, and there's HDFC flexi cap, which is doing well, right? And if you see, there are other when it comes to multi cap, I don't recollect the name exactly, but I think there's a Nippon multi cap or HDFC multi cap, which is doing quite well. I need to recheck on that particular aspect. Okay, but having said that, if in case an investor would like to invest into more diversified way of parking money, where because we have to understand that when it comes to multi cap, by default 25% will be in small cap and mid cap. and 25% mid cap. So 50% of the portfolio will have a higher risk.
Yeah.
That may not suit all the investors if in case they are at the initial stage of their investments, or not necessarily at the initial stage. Even though they are at the mature stage, their appetite may not permit them to do. So there, the flexi cap category could be better. But having said that, as we have seen, there are a lot of investors who have parked their money in multi-cap, right? So it clearly says that there are investors who are keen to park their money.
Okay. Well, I think we got some answers now. Unfortunately, we are out of time completely. Otherwise, we would have loved to talk more. But we'll have to call it a day here on this leg. So Harshad and Suresh, thank you so much for taking the time out and being with us and giving us all the wisdom.
Thank you. Thank you, Neeraj.
Thanks, Neeraj. Thank you.
Viewers, thanks for tuning in this leg of the Mutual Fund Show.